This episode is brought to you by 180 Markets, where it is our goal to bring every individual, fund manager, family office, or any qualified investor access to Australian Stock Exchange capital raises. If you are ever interested in how to access ASX capital raises in a super simple way, 180 Markets is for you. The sign-up process is easy. You just upload your ID, proof of your investor status, and your current brokerage account information. The settlement of shares goes right into your existing account, and you can access our very next capital raise. If you're interested in free, easy access to thousands of ASX capital raises, including placements, IPOs, reverse takeovers, and more, check out 180markets.com.au. Hello, investors. Welcome. Another edition of 18 Minutes with 180 Markets. Friends, what if I was to tell you there's an investment out there with big upside growth, already in real true production, has true growth capital on the balance sheet, and there really is a true upside blue sky optionality component as well? Well, with us today, we have such a company. We have Managing Director Stephen Wetherall from Lucapa Diamonds, and he's going to tell us all about his company, his business, and how it embellishes all of those characteristics I said earlier. Stephen, with that introduction, welcome to 18 Minutes with 180 Markets.
Thank you very much, Greg. Thank you for having me.
Hey, Stephen. Early on, obviously, we always want to start with someone's story. Can you just tell us a little bit about how did you get to where you are today?
Wow. Okay. No, it's been a journey, Greg. Certainly, I've not always been in the diamond space. I started out with Deloitte and Touche as an auditor in the late 90s. I stayed with them as an audit manager post my articles. But when I decided to leave the profession, I put my CV out, and this small company called De Beers said to me, "Why don't you come for an interview?" So to cut a long story short there, I went to the interview and I joined De Beers back in 2001, and that started my journey in the diamond space. After De Beers, I joined another company called Gem Diamonds. And then after Gem Diamonds, I relocated to Australia, and I have been with Lucapa Diamonds now for some 6 years as well. So my time has been long in the diamond space, and I think very fortunate that in most of the projects I've been involved in, they have tended to be in the high dollar per carat categories, very special mines, very special production from those niche mines. So that is an area of the diamond space that we are currently focusing on and have managed to build some considerable experience in that regard.
Absolutely. And I say, that's a great segue. Can you just tell us maybe a little bit about, Lucapa itself? Obviously, you said it's a high-end diamond producer, and I stress the word producer, but maybe I'd love to hear it in your words.
Sure, absolutely, Greg. Look, just it is a short 5 years ago when I joined the company here. Lucapa was a pure explorer with fantastic ground in Angola, recovering from their bulk sampling campaign some magnificent stones. We have, over the last 5 years, built 2 mines within the group, and we have continued to work on one of the most magnificent or prospective kimberlite exploration projects. So we've transformed as a company significantly over that 5 years from a pure explorer, where we would need the support of our shareholders to continue to explore and work our ground, to where we are today, to where we own 2 producing mines and 3 exploration projects, one of which is the very prospective Lulo concession in Angola.
Absolutely. And maybe, the best place to probably start is with your largest producing mine. Can you just discuss that a little bit for the audience, first and foremost?
Yeah, well, look, I mean, they both are, I suppose, equal in our eyes. They're both important assets. And Greg, we are expanding both of those mines. We last year completed an expansion on the Lulo alluvial mine in Angola. And this year, the recent news coming out that we successfully raised the capital to implement an expansion at the Matata mine in Lesotho. For us, they're equally important. They're both exceptional mines. They mine some of the highest dollar per carat quality diamonds in the world. The Lulo mine in Angola has got average production of between $1,500 and $1,750 US per carat. I mean, that is sort of 15 times the global average. And our mine in Lesotho that we brought into production last year and are going to expand towards the end of this year, that mine's between 500 and 750 US dollars per carat. So again, almost 7 times the world global average. So very, very special mines themselves. We work equally hard on both of them. You know, I don't like to put one in front of the other. We're just developing them perhaps at different times of their life cycles.
Absolutely. It's like choosing which of your children do you like the best.
Absolutely. Absolutely.
You know, I'd say that the most recent though is the on the Mate side. Can you just discuss that one a little bit? Because obviously we just completed a capital raise, and certainly a lot of the cash is going to be used in that endeavor to grow that mine.
Absolutely. Look, the Matata mine in the mountainous kingdom of Lesotho is a niche mine. That resource has for a number of years been known as the second highest dollar per carat kimberlite resource in the world. But for a number of reasons, which I won't bore everyone with today, it is remain undeveloped until the Lesotho government put it up for tender 3 years ago. We entered into that process and we were successful in bidding for that mine and winning the tender. We successfully raised the money from financiers and built a state-of-the-art facility at the Matata mine. That facility is a 1.1 million ton per annum plant. Unfortunately for us, when we commissioned that mine, the diamond space itself, Greg, was going through a bit of a torrid time. Certainly, you know, supply was quite high. The liquidity in the midstream was low. And we also had what was considered to be a polished inventory level that was quite high as well. All of that culminating in suppressing diamond prices in late 2018 and 2019. So whilst we delivered on a fantastic project, built the mine on budget within the time that we allowed ourselves and commissioned it in 2019, unfortunately, we launched it in a soft market. And that obviously didn't you know, produce the results that we had hoped for. But certainly towards the back end of 2019, diamond prices were on the up. Early into 2020, diamond prices were strong and they were rebounding quite considerably. And then unfortunately, I think everybody knows what happened in February, March, when we all sort of needed to face a new reality and deal with the pandemic around us. You know, we went through some tough times with Matata in terms of putting it on care and maintenance. You know, the lockdowns across the countries, the lockdowns in the markets important to the diamond industry where there was no movement resulted in us needing to suspend the operations. We navigated that time. I'm not saying we were perfect, but certainly I think we've been successful. And in that regard, we've recommenced the mining operations in October, and we're back on track to delivering value to our shareholders. One of those paths to deliver the value was an expansion that we were always contemplating before the pandemic hit. So, you know, with the market recovering, with us getting back up and running, in order to deliver value to shareholders sooner rather than later, we started to engage with supporters to see whether there was an opportunity to expedite that expansion. And I'm pleased to say that, you know, that fell on very, very good ears and support. And we managed to put away that capital raise that we announced last week of 10 million Australian dollars to do the expansion. So that is what we're embarking on now, is to roll that out over the next 4 months.
Absolutely. And I think that there are 2 points there that I'd love to highlight, which is firstly, on the overall diamond market, the supply demand, some supply in the last 6 months has come out of the market. And it is critically important to understand, not just for diamonds, but for frankly, any commodity in the world. Can you just discuss the supply shrinkage for a moment, please?
Sure, absolutely. Look, for a number of years, there's been quite a big supply coming into the market, not just from the majors, but a lot of new mines that also came on stream. So late 2018 and early 2019, that volume was being seen in the diamond space. Now, with a constant demand, the higher volumes would naturally suppress price. As I mentioned earlier, a tightening of the midstream liquidity also exacerbated the issue, resulting in quite a high level of polished inventory build-up as well. So the diamond space itself, notwithstanding that I think the world was probably in a lot better space in 2018, 2019, resulted in pressure on the rough diamond prices as well as polished prices. But when De Beers and Alrosa amended their strategy, they started to focus more on price protection as opposed to a volume-driven strategy in terms of generating the revenues. You saw an immediate change in the diamond price. With the lower volumes coming in, you saw a return in the price, you saw a return in the midstream margin, and you then saw a demand pick up again for the product. And that positively impacted the diamond prices late 2019 and into 2020. So that constrained supply dynamic from the majors favorably impacted the diamond space in late 2019, 2020. And if you look at what Alrosa and De Beers have said in recent months with regards to their results announcements, they are going to continue with that strategy and support the market to ensure that it comes back as it should. I think in terms of pricing dynamic, we'll see a rise in prices as we lead into the year end. We always have a positive price movement when we lead into the festive season. There is a demand from the diamantaires to source products to cut and polish them for the sales into the festive period. And then also we generally see a positive pricing dynamic in January, February of each year as retailers and jewelry manufacturers replenish their stocks and prepare themselves, I suppose, for the Chinese New Year as well. So the end of the year and early part of next year, we should see some positive price trends.
Fantastic, fantastic. So, and as I said, I think it's important to highlight the macro. And now, just moving back to Mate for a second, in my mind, your expansion to go from 1.1 to 1.6 million tons is highly de-risked because it's not particularly complicated technology. Could you maybe for our non-geologist investors out there, just explain what really is the capital for in the upgrading of the mine?
Absolutely. You're absolutely right, Greg. The development is significantly de-risked. We're not putting up a brand new plant, a plant that is basically been designed and then built. What we are doing are minor plant modifications to an existing plant that is up and running. On top of that, it's the designers and the builders of the original plant who are also going to complete these minor plant modifications for us as well. So from that perspective, it is significantly de-risked. We've been operating there for some 18 months already. So the cost environment, the operational environment, the political environment, the export environment, and our staffing dynamic is well known. So it is a much reduced development project in terms of the expansion that we're going to do there.
Absolutely. And then, I guess, turning on to the valuation, if you will. Obviously, we always love to discuss, what's an NPV versus the current market cap. But I think it's particularly important in a production company as opposed to an exploration company where you'll always see those gaps. Can you just discuss, roughly speaking, the gap between NPV and current market cap, if you will?
Yeah, look, I'll answer what I can. Given that we're listed and the ASX place certain restrictions on what we are able to say and with regards to our resource and our development programs. Certainly, let me talk to what is public knowledge and in terms of what we believe. We have recently put out a presentation that shows that over the next 6 years, we'll have approximately $67 million US dollars generated from the Matata mine alone. Now, if we convert that to an Australian dollar number, you're not going to be very far off 100 million Australian dollars. Now, when you think our market cap as it sits today is around about 40 million, you can see, I suppose, the great divide in terms of where we believe the value of the one operation is. This is excluding the value of the Lulo alluvial mining operation and excluding, I suppose, as you pointed out, the more speculative valuation that could be attached to our very, very prospective kimberlite exploration program as well. So when you're looking at one operation and you see over the next 6 years that you have the potential to deliver almost 100 million Australian dollars, and you look at our market cap today, I think that in itself tells you where we believe the value of our company lies versus perhaps the perception in the market in terms of what we're doing. But it's my job to turn that around, certainly with the production that we're going to be doing and the cash flows that we anticipate and generate and the money that will come back to the center. I'm sure that gap is going to narrow quite considerably.
Absolutely. And then, as we said now a couple of times about upside optionality, it's something that we all as investors like to have in our back pockets and not pay for it. And certainly it feels the case today. Can you just explain why kimberlite could be a potential blue sky, if you will?
Absolutely. Look, our kimberlite exploration program in Angola on the Lulo concession is one of the most prospective, and I'll tell you why. We have now, for the last 6 years and for the exploration period before that, been recovering some very large high-value diamonds. Those large high-value diamonds have shown almost no signs of transport. So when you are finding diamonds in an alluvial mining campaign that show no signs of transport, you generally look down or very close to where you are. When we look down and around us, we see a significant kimberlite province. We have got a number of anomalies there that we have drilled and confirmed as kimberlites. We've also got a handful of those kimberlites that we have proven to be diamondiferous as well. So we are very confident that around us, within those kimberlites that we have identified, we will find the source of these stones. Why we believe that that source is going to be extremely viable and of high value? Well, when we look at other mines around the world, particularly the ones that we have a lot of experience on, the low-grade, high-value mines, if you I suppose, allocate those diamonds to a source or even maybe one or two sources, you will see that the value of that kimberlite is going to be extremely, extremely high. Let me perhaps tell you why. If you look at Litseng in Lesotho, it's got a grade of some 1.67 carats per 100 tons, and it sells its kimberlite diamond production from in between $1,500 to $2,000 per carat. That mine itself is an extremely high value mine. When you look at Mutai, we've got a grade of somewhere between 2.5 and 3 carats per 100 tons, selling diamonds at somewhere between $500 and $750 per carat. I've already outlined what I believe the value of that mine to be over the next 6 years as well. So if we now do a comparison and we say, right, the diamonds we're finding in Angola on the Lulo alluvial concession, we're recovering at grades of between 6 and 15 carats per 100 cubes. So if we put that into a tonnage perspective, we are looking between 3 and 7 carats per 100 tons. Now, if we look at the value of the diamonds that we're recovering from our ground as well, we are in between the $1,250, $1,500 per carat to the $2,000 per carat mark. If you do the maths on the revenue and the revenue per ton that could be found in the source, you're going to have an extremely viable and high value mine. So that is the pot of gold that we're looking for. Unfortunately, as I've mentioned many times, we have a very significant kimberlite province underneath us. We have to do our work methodically. We have to continue to work through, and yes, we're searching for the source, but at the same time, we're also discounting those that we don't believe are the source and narrowing in and homing in on what we believe will be a very significant transformational find for us. But it takes time, and it's time that we're prepared to give, and we're working hard searching for it.
Great. And as I said, for everybody out there, that is purely upside to the already in production company. Stephen, in closing, do you have any closing words for us? And also, perhaps, what would, in your mind, success look like over the next year?
Yeah. Look, I think patience is a strong virtue. I think in the environment that we've been dealing with in 2020, certainly patience is going to be tested. From our perspective, we would have loved a normal year, but it is what it is. And, we're here navigating it, and we firmly believe that we will be successful at the end of it. From my side, what I believe success would look like over the next year or so, the immediate goal for us is to implement the expansion and get that plant up and running at Mutai to 1.6 million ton per annum, and starting to generate the revenues and the cash flows that we firmly believe are there. Naturally, the market recovering as well will assist in that program. Our mine in Angola that we continue to work well in. It's a very special niche mine. It will continue to produce its cash flows and revenues as well, and we'll start returning those revenues and cash flows to the center. I think we're now at a capacity, at a volume within our operating mines where we should start seeing returns coming back to the center, as opposed to, I suppose, Lucapa continually investing in our operations and seeing money going the other way. The Matata mine will be at our desired capacity. The Lulo mine certainly is at its desired capacity, and we should start seeing those returns coming back to the center. Another success that we would hope for as well is finding the source or finding a kimberlite that we believe could be the source at Lulo as well. We work daily on that. That program is ongoing, and just like everybody else on our register, I would hope it would be tomorrow. But certainly from that perspective, if it's not tomorrow, we'll work hard and try and make sure it's the day after that or the day after that. So that's what success would look like for us. And I hope that culminates then in the share price, and it starts to reflect in returns for our shareholders, not just in the share price, but also perhaps us giving back some of the money that they have diligently invested in us over the years as well. So that's what 2021 would look like for us. We and the team here continue to work hard to try and deliver that.
Fantastic. Stephen, thank you very much, and we look forward to the ride with you.
Excellent. Thank you very much, Greg.
Bye-bye.
Bye-bye.
Thank you for watching another presentation by 180 Markets. Don't forget, if you want access to thousands of ASX capital raises, head on over to 180markets.com.au, sign up, and get on board for our very next capital raise. Thanks for watching.